Hello everyone, and welcome to the PivotBoss Monthly Market Outlook for March 2023. I am Frank Ochoa, also known as PivotBoss. Welcome. If you are new to our PivotBoss Monthly Outlook here, you can learn more about PivotBoss at pivotboss.com, also at ecofin.pivotboss. That is where we have our trading room as well. And also, I am the author of the book Secrets of a Pivot Boss. And again, very fortunate that traders around the world continue to find that text and continue to find great ways to engage the market. We're going to talk about some of those ways here today. We have a pretty tight list, a pretty tight list of stocks to look at. We're going to look at various markets, including futures, some crypto. We're also going to look at various stocks. Some of these stocks are very actionable in terms of short-term directional conviction. Some are still kind of building out within ranges. So again, quite a bit of energy building out here. We're going to cover several charts across multiple markets in multiple time frames. Additionally, if you have anything that you'd like me to take a look at, any tickers at all, obviously, please drop it into the chat there, either in the Zoom webinar chat or in our Pivot Boss trading room chat. I'll be monitoring multiple spots there. Hey, Adrian. Yeah, feeling much better here today in the afternoon here, and ready to get at it. Thank you for asking there. All right, let's take a look here at the broader market. We're going to start off with the ES. And you can see today was about as range bound as it gets. Quite a bit of volatile movement back and forth across these multiple futures contracts. If you look over here though, the higher time frame daily chart for the ES, one of the things we started the year with in our first monthly outlook of the year was this narrow range, and which way were we going to break out from that narrow range. We closed the quarter near the midpoint of the quarter, so the early idea was if we break out of the range to the upside, you go attack the previous quarter's high. If you fail, then you rotate to the previous quarter's low. So we got an initial wave of strength out of the gate here, and we went right up to that quarterly high. Here recently, we've seen quite a bit of resistance off that quarterly high between 4180 and 4200. Big time line of resistance up there. So if you want to know which the resistance level is the one to continue to watch from a long-term basis and even a near-term basis, is that 4200 level. One thing that we talk about with the ES is its 400-point distributions right now. You got the 4200 level, and then above that you have 4600, and that's one distribution there, 400-point distribution. And then down from 4200 you have 38. That gives you another big distribution down here that price is traded within and prior as well. And then below 38 you got down to about 34. So again, 400-point distributions. Those are the three right now. And we're currently right at the center of the middle one after rotating from the edge back down. 4200 right here, big time resistance on multiple passes. One time it got above it, dropped off of the 200 and back below. Over here, resistance ever since the FOMC here. That is the May 4th FOMC from 2022, and on that day it rallied to here to close. The very next day it dropped well back below it, and since then that level's been mostly offered here as prices remain below it. So 4200, the big time level there. We're currently rotating down away from that level, and so when you look at the market right now, still mostly trending downward, right? You have this kind of line. Before you may have had that kind of line. That's the thing with trend lines. They continue to kind of adjust. But we still maintain a downward bias overall. We have, since the strong Q4 low, we have maintained a near-term upward bias. So right now we almost have a perfect symmetrical triangle that's built out since that May time frame almost, right? Since that zone right there, we've had up, down, up, and now we're coming back in, and we're right here at the center of this range. So this energy right here, we're right at the cusp here where things are coiling up, and very soon we get a break and move. Again, is it going to be to the upside, back up toward 46? Can it get through 42? Or is this reversal going to take us back to 38 very near term? And then from there we see, does it maintain acceptance within the range, or do we break down and go challenge the low of the year? So right now, clear 4,200, big time resistance. Still have the higher time frame downtrend in play, and now we have a short-term downtrend in play. So directional conviction wise, things are still pointing downward at the moment. The other thing, inflation and the Fed continue to be number one and number 1A of what to pay attention to, right? That's the headline risk everyone's looking for. Fed Day has been important. You can see the last time we had Inflation Day was here in December, and then we had Fed Day right afterwards. That was a big move here. Recently, we had Fed Day here on the 1st of February, and then we had Inflation Data Day right there that gave us a pretty decent, strong high. And from that high, we've seen price turn down for the day. It wasn't the sharpest sell-off away from that high, but that high was clearly in when it developed. And it was perfectly at the 41.86 half FOMC key level from May 4th. So that was the high of the day, and then it turned down. Since then, you had that inside digestive day, then you had a failed new high with a breakdown, another digestive day, another stop run day, and now we've had a leaning 6-day narrow range, leaning to the downside here, with the likelihood of continuing the full-on reversal back toward the beginning of the year's starting point. So you're starting the year here, you rally, you find rejection at the edge. We're most of the way down now. We likely come back and finish that move to between 38.50 and 38.70, just in the near term. So this developing 6-day range has enough energy to get us not only to this portion of the chart here, the previous quarter's mid and the previous quarter's close, but also into that 3,800 support level here that we talked about off 42. So 38 here up to 42, 42 right back to 38. And prior to that, it was 42 to 38. Prior to that, it was 38 to 42. So we've made that move 1, 2, 3, and now 3.5 times as we come down to complete the 4. So 3,800 could be ahead. We have enough range in here that suggests anywhere between 180 and 200 points of range. If we lift this to 6 days, because it's the 6-day narrow range, you can see the 195 is that upper target right there. 195, you have compression that can take you at least to that red dot, maybe beyond it. 200 points, just call it 200 points. If we can break down away from 4,000 here, it opens up 3,800 up ahead. So there's a 200 point potential move here coming up, and it's likely to the downside. Doesn't have to be to the downside, obviously. If price breaks through these highs, you got the 200 points that can take you right back up. So regardless of direction, you still have about 200 points of energy in this tank. So we could be looking at quite the move ahead over the next 5 to 7 days. Now, when you look at some of these candidates that we're going to look at, they're going to look very similar to this. Many turning down off of the quarterly highs, pulling back, narrow ranges with energy to go finish the move. So I found several candidates to look at that we'll discuss here that look very similar. If we take a look at the NQ, hey Steve, good to see you. Welcome and thank you for joining. If you see right here, we had a very strong top as well. We talked about inflation day to day and how price turned down off of that level. NQ didn't have, or had a similar type of day, but a little bit different. In this case over here, the high was back here. This was the day after Fed. So Fed day, we had a rally, Then we had that big push to the top, and then after that high, price never came back to it. Instead, lower highs off the 12.8 level. 12.8, if you go back again to that May time frame, you'll notice how many times price bounces off 12.8. So here's 12.8, you bring it across this way. Again, here's that FOMC in May. It drops through it, it comes back, drops away from it. Was able to push through it momentarily here, head and shoulder back down, rejected here, back down, and then here you are seeing again how much resistance that level provides as price turning down off of it after a strong 2-day start to begin the month. So right here, narrow 6-day range after a turnaround, a hard turnaround from resistance. Kind of like the ES, do we make that move to go back to break even for the year? Do we go find support down below between 11K, maybe 11.2? At the moment, this thing has enough energy for 750, just call it 800 to 1,000 points of range. 800 to 1,000 points of potential range ahead. Right now we're sitting at 12K. You drop 1,000, you go to 11K. That's basically right back to break even on the year. So already this 6-day narrow range has enough juice to get you very close to break even, or if not right on that zone. So enough energy in this little 6-day narrow range to really provide some juice. Now again, as I tend to mention, when you do have these narrow ranges, you know, a 6-day narrow range can turn into a 7-day narrow range. It can turn into an 8-day. That's what we said after day 1 of this narrow range last week. We said, hey, 1 day here, you know, that could lead to a great breakout in the next day, but if it doesn't, then it's going to be a 2-day leads to a 3-day that could lead to a 7-day, you know. And that's kind of what's happened here. It's developed into quite the 6-day range with a downward bias, and you're starting to see hard crossovers of the 8-period pivot-based DMA against some of its longer-term counterparts, which means more downside could be ahead. The other thing, one last thing here with regards to the NQ, right there, previous or year-to-date rather, year-to-date VWAP, and then you have the 200-day moving average right there. So big time double area of confluence there. Can this market hold it? If not, you start to drop down. S1 right now, right here, or is that S2? Let's zoom out and just get the right level here. Yeah, that's S1. S1 would be the next level down there. That's 11,279. If we got a little bit lower than that, 10.6 could be in play. That'd be S2. So again, we have the potential to really drop down if it fails to hold value here anytime soon. Let's take a look now at RTY. RTY is interesting here. This one had a very, very strong start to the year. Outpaced the ES, outpaced the YM, really outpaced everything, and then it found a strong high. Again, that's the second day after the Fed. So February 2nd, Fed day was February 1st. After that strong top, it could never recover. Bit of an extreme reversal here and a rotation back down. Price bounce, couldn't get going, stop run day here, and so far we developed this 6-day narrow range precisely around year-to-date value. So right now, over the last 6 days at least, and perhaps parts of 7 here, this market has been happy to trade perfectly around value, at least the current VWAP measurement year-to-date. It's facilitating trade in this zone, but still maintains a downward bias. You'll notice here the previous quarter's high there. It dropped back below it and now showing some resistance, which again would suggest a rotation back toward the next major PivotBoss pivot below, which would be a double. It's the previous close and also the previous mid. So if it fails to hold this zone, you know, if it breaks it to the downside, there's really nowhere left to go but about 780. You know, back to the scene of the crime. Bit of a large form head and shoulder pattern developing as well, which again would suggest some weakness here. You go back a bit, like we did for the ES and the NQ, and you'll notice again how strong the resistance is in this zone up here for this chart. And it broke down here, failing again, and you know, the way it looks off of this level right here. Let's talk key range now. Let's talk key range analysis real quickly. You take this impulsive high and bring it across. That's 1920. Take the impulsive low, bring it across 1640. The midpoint is right there at 1780. That's the key range. Strong high, sold off aggressively, strong low, snap back to the middle, key range. Last time it broke through, first of all, it compressed here because that key range was so large. That key range is so large that, you know, you need to build some energy sometimes to go make that cross-country move. So it builds up the energy here and bang, breaks through the middle and rallies to the high and through it. Bit of a kind of a weakly formed head and shoulder, but that type of pattern breaks you back below and you drop right to the mid. Fast forward to where we're at now, very similar price action. Built that energy here at 780 like it did back here. Rallied to the top edge like it did over here. Pushed through it, head and shoulder, falling back below like it did back here. And now the level left to go grab is 780, the midpoint, as it's done over and over. So 1780 could be the next level ahead. That's 120 points from where we currently are, and we're currently sitting right at VWAP year-to-date value there. So building energy. Now, when we look at the compression here, 6-day range down here points to about 100 points of movement. 100 points seems fairly easy. You know, you bring 100 points this way and you can see it's done that almost every time and then some. It could go as far as 150 easily. So 100 to 120 points on a breakout move could be ahead. Looking for big time reactions off of the 1920, that would take you this way to maximize that move. But if we're looking at 100 to 120, that's basically what we have here. 1880, a breakdown to 1780, that's 100 points. You know, right now we're at 1900, that's 120 points. That's basically exactly what we have right here in this range. So it's lining up very similar to what happened last time. Again, markets don't always trade perfectly like they do in a prior period of time, but they often can repeat those patterns over at least a shorter time frame, which is what's happening a bit right now. And if you look back a little bit farther, it happened even before that. You had kind of this edge, price smashing through with a bit of a head and shoulder here and drops back below hard. The next pullback brings you across the range. You know, this similar thing but with a larger pattern over here. So potential weakness here up ahead out of this one. But that doesn't mean sell it right now. Keep that in mind, right? These are developing ideas. These ovens, as I like to say, are still in the oven, and they got a little bit more time until they're done. At some point, you may see some strong high develop. That could be an actionable entry. Or perhaps we start to see the breakdown and now the stop run day entry, and then you get yourself into a day trade or a swing that takes you to that target. But right now it's still in. It's still in the range, and we could continue to see a bit more back and forth until something happens. I mean, a 6-day narrow can turn into a 7, can turn into an 8. Got to be patient. But eventually a breakout occurs, and it could be significant. If we are to see an upside break, massive strength through 1920 would suggest a stop run day type of move. So it could be significant from that perspective. You know, in that even a 1-day move could be huge. Like back here, for example, you got kind of this developing thing, and then you get a launch pad failed new low that turns into an outside day. That could easily happen here, even if it's just a 1-day basis. So again, the edges are going to be very important. But directional conviction still points downward as of right now. And when it hits, it could be a very aggressive 3 to 5 day move. Just think right here when it got going, it was 1, 2, 3 days here, and you're like, bang. Same thing could happen here on the way down. Let's take a look right now at the YM. The YM here has built quite a bit of energy. Got a little bit of a late hour rally, which gave today's bar quite the failed new low look to it by the time the day ended. Still kind of a downward bias, narrow range, and sitting on significant support. So that 32,600 is huge support right now. If you look at the broader range here that has developed before, we have this range right now that has developed 34,500. You have 32,600 right here, and then you have everything below it. 30,005, 28,500, somewhere in that zone. So we've traded mostly in this range for a good 3 months. It's actually been longer than that, right? All of February, all of January, all of December, and parts of November. Well over 3 months of compression here. Did we already start the breakdown process? And is it almost a given that we've already going to rotate back down within the range? If that's the case, the first bounce to begin March could be sold for a continuation down. So we got a little bit of strength here out of this late day move today. When you look at the pivots, that's your pivot range from last month. Your pivot range from this month is here. So if we rally into the lower value relationship, ideally a rejection may develop that leads you to new lows ahead. This could be very well be the defining factor here. The previous year's close price coming back toward that zone could get this thing rejected. But if we do move, let's quantify this real quickly. This range right here in the weekly time frame, a good 15 weeks or more in development, and the amount of juice that could come out of this one here is easily 4,000 to 5,000 points. So this is significant when you come up in the highest time frame here weekly. Well, not the highest, but super high time frame weekly chart. You can see some rounded qualities here. Failed new high right there recently, a big breakdown last week, and then so far to begin this week, you got this guy developing. Obviously, today is a Wednesday, so you don't complete a weekly bar on a Wednesday. Still more until this one's finished out, so you don't really pay attention to it too much. But you can definitely see this compression right here is big time. And if we get a little bit of a move just to value or the average, not even over average, you're looking at 4,800 points. So that amount of movement could be huge. 4,800, call it 5,000 points of range. And maybe it's already starting to unravel, right? If 33.5 was the breakdown point, or maybe the epicenter is 34K and we've already sold away from it, you subtract 5 grand from it, and you're looking somewhere between 29 and 30K as the next target to the downside. So this is a massive pattern right now in the YM. It had a huge Q4, which gave it a massively wide quarterly range. That's probably the widest quarterly range ever if you go back in history and look at it. And so far this quarter has been mostly range bound. That would make sense. Expansion leads to compression. But once you get this compression, the next phase of expansion is coming. I mean, if you look at next quarter's range as of right now, it's just this, whereas last quarter was all of that. So something's coming, and it could be to the tune of 5,000 points here. And maybe we've already begun that journey to the downside. So big time potential here out of the YM as well. Maybe we bounce a little bit here, but we still have a downside move, downside break happening. So the next bounce could be a selling opportunity for another round of weakness, and it could get very, very bearish if this thing starts to break and hold below 32.6. So some thoughts right there for the YM. Now I wanted to jump over real quickly to some Bitcoin and Ethereum. One of the things we mentioned to begin the year, and again, this is our second monthly outlook of the year. The first one we did in the first week of January, and the one thing I mentioned for Bitcoin was if this thing can get above 18K, it opens up a move to 21,000 and to the 24 to 25 edge to begin the year. And that played out almost perfectly. I mean, actually, it played out better than I thought, faster. Initially, I mentioned if this thing can drop down to here, that would be best case scenario, because then you can reject here and snap it back. And then ultimately, by the end of the year, if this thing can tag 30K, I mean, that might be a super huge win for the year. And obviously, we didn't get down that low, but we got pretty high. 35,345, which is right into that 25,345, which is right into that 25K edge, and that's the major edge. So the Q1 idea played out already and got the ultimate target. It got 24 in the first month, and it got 25 by the next month. So massive move, and it recovered the 18. The reason why I liked it, so let's talk about why, because you can do this also when you find these ranges. But this is a market structure concept that I use quite often. But if you look at this prior range over here, it found the high at 25, it found the low down here near 18, and then it kind of had some middle qualities there as well, something in the middle, right, wherever you want to draw that line in the middle. And sometimes it traded down here, sometimes it traded up here, sometimes it down here, but here it fell through there. It fell below that level. But here's where it gets interesting, is that once it fell through the bottom of support, or the bottom of this trading range, it didn't keep going. Instead, it built a super narrow range, a narrow range, a narrow range that developed perfectly below that prior support level. And this is what I would call a box reversal. And now, because we didn't keep going down, instead we developed a box. If price can ultimately break that box back above the bottom of support, and you see a transition day as well, it opens up a move that takes you back to the center of the range, and 80% of the time you're looking at a reversal across the prior distribution. So that was the concept of that idea, and there are several stocks that we used last year as well that follow the same type of thing. So very good concept there. But now, here's the bearish part of this story, is that once you get to the top, though, once you make that pass, you transition back through the bottom and you make the move to the top, the odds favor a rotation back to where you came from, back to 18. So it wouldn't be surprising if we're starting to top out a bit up here and you start to make a move back to this level. Ideally, on that pass back down, it becomes support and is now a floor, and anybody or anything back down here doesn't get tested again. That would be ideal, because that's how then you can work your way up through the top eventually. So right now, while we were bullish to begin the year and these levels have been hit, great percentage return and moves right to where we expected. At the moment, odds favor perhaps a pullback. In the near term, you got this narrowing range here, and that takes you back to this kind of level right there. That's 21.4. That'd be the short-term level. You break 21.4, you open up 18 as a reversal. So BTC could be looking at a bit of weakness up ahead, especially if it takes out 23K. You got a good 1,500 points to the next target down, and then from there you got quite a bit more, 5,000 point move. If you don't trade Bitcoin, or if you trade options or want to trade ETFs and things of that nature, BITO can be used. It is the Bitcoin Strategy ETF, and what you'll see here is, let's move this. This one has options. Some of the others don't have options, right? Like the ETHE, for example, for Ethereum. But this one does have options. And the options actually aren't too bad. I mean, right now, open interest, if you look at the current expiring monthly contract, the 17 March, 16 days out, there's 16,000 contracts of open interest at the 14 strike right now. Call. So that's pretty good. Today's volume wasn't that great overall at that strike, but I mean, you can see that there's definitely volume there. The put side, there's 15. How many? At the 15 strike, there's 10,000 contracts of open interest, which is right here. So you can definitely see that there is engagement there. You also have weeklies as well. So that's one way to engage Bitcoin if you don't want to actually trade the actual coin. You can then engage the ETF just like you would a stock and its options as well. So that's BITO. Let's take a quick look here at ETH. This is Ethereum. Similar to Bitcoin, we were looking for a rally to begin the year. Again, we mentioned the best case scenario would be to come out here and take out the previous low, and then you snap it back up the way. But again, that wasn't likely to happen. Instead, we saw strength. So in this case, we were looking for anything through 1350 opens up 1700. Got that. And then if it can get through 1700, you might be able to go get 2000. That's the upper end of the range. And so right now, again, when you take this range and you define its distributions, the 2000 level up there, 1700 is about right there, right? You come down, 14 maybe right there, and then you come down a little bit lower. What is it? 1000 down here. And when you look at just kind of these lines, you can see a little bit of trading in here, then a little bit of trading in here, and in here, and then there's some down here and here in this lower distribution. Right now we've done most of the damage in this middle one. Do we cross the path and go grab 2000 and trade in here a little bit before we rotate back down? Or do we just start to turn back down and fall through 14 and maybe retrade? This one doesn't look as bearish as Bitcoin. Bitcoin did rally better, I think, in terms of across its complete range. This one still could have gone and gotten 2000 if it really wanted to get bullish, and it just didn't. So right now, this one here still could make its move, but I think 1700 is providing quite a bit of resistance right now that could continue to stick for a while. So I really wanted to look at this one from the higher time frame. So let's look at ETH/USD. This gives you the big picture view, kind of the cash view of ETH, and you can see it back here starting out. You can see it here, then you see the big move. You can see the failed new high, the big rotation back down, big drop. And now when you look at some of these levels here, so this is again a weekly chart, and let's take a look at the distribution to the right as well. Something we noted in our trading room yesterday is this distribution and how unique it is. You have super LVN right there, 1000. The other side can be, say, 2000, right? Another LVN there. You have this little guy there as well. That's 1700. And then you have the high volume node, 1600. And then look at this. You got another one right here at about 1200. That's what I call a twin VPOC. It's a twin VPOC. So you got two of them in a distribution. And the other thing is the shape of these are very unique as well. Typically speaking, a D-shaped curve looks something like that, right? A Gaussian curve. You have your middle 70% VPOC here, and the edges are out this way. Instead, you have VPOC here, and then you fall off a cliff. Boom. And then you fall off a cliff. Bang. That tells you the data set is very, very close together and compressed, and you have a super amount of volume there as well, which could be significant down the road. This could be a massive accumulation phase for what's to come up ahead. But when you have twin VPOCs at times, depending on how they develop, there was one here first, and then price rallies and sat up here for the last 6 or 7 weeks, and then you saw a shift higher in VPOC. So that is a VPOC shift going bid, or at least this one here rallied and you got it to shift up. If that goes bid, that's where you really start to open it up to the upside. So this is very interesting the way it's developing right now. Quite a bit of compression. Really, you're looking for this thing to get, you know, from a long-term basis, can it get back above 2,000? Because if so, I'm not saying it rallies to 48 right away, but you start to work your way back into the other side of the LVN here, which could be somewhere around 3,500. So it could be a pretty significant move. That would be a double from where we currently are if it can make it to that edge and that prior distribution sometime down the road. You know, that could be in play. Yeah, so Dwayne, yeah, the levels are 1,000. You have 2,000, 1,700, and then I put 1,400 or something like that 1,400 level. So when you come down this way, those were the big levels. 2,000, oops, 2,000 there, 1,000 there. You got 1,700 here, and then you got about 1,400 here. That 1,400 can be, you know, 17 or 1,350 or whatever, but somewhere close to that. Those have been the distributions. So interesting price action developing here for ETH. You know, again, after strength here, if this were to rotate back down, you want to find some strong low that can snap it back up. So right now, very heavy at the moment at these highs. Is this heaviness, you know, going to lead to some sort of breakout, or do we start to see a liquidation here that starts to bring it back down? At the moment, we're going to see a lot of stocks that look heavy like this at these highs, and got to see which way they go. Speaking of, let's take a look at some stocks now. I'm going to start off with Apple. It, you know, again, a lot of folks either have it or watch it or trade it, and something that I found very interesting about Apple in two different time frames, the daily chart, is how it continues to find strong rejections after strength, even 5 quarters later, 6 quarters later. And the channel is still kind of developing as well, where you have kind of this downward slope up here, downward slope down here, and maybe we've just started our way back down within the range. You know, how far do we go? How far do we drop? When you look at the weekly time frame for Apple, there is a level down below that could be in play, and if it is, it tends to be one of the best spots to buy on a long-term basis, and that's the 200-week moving average. The 200-week moving average doesn't get tested very often, but when it does, in this stock at least, it can tend to be super, super bullish. So here's a test, for example, right on it. Look at the drop that went into it initially, right? So you have a wave of strength that started with this accumulation in year 1. You get a markup in year 2, a markup in year 3 until you find a strong high. Remember this high right here? That was the 2018 Q4, which was the most bearish Q4 we had seen, the most bearish December we had seen, you know, since the Great Depression, things of that nature. It was very bearish. So it wasn't a COVID drop-off, it wasn't anything like that, but it was very bearish in its own way. And it dropped precisely to that 200-week moving average on the last trading week of the year, and then things rallied from there. Never came back to it. This accumulation happened off the 200-day moving average as well. You can see it right in here, testing, getting close, and then it works off that level. So you come to current activity, and you can see since it hit it that 2018 last trading week of the year, it's done this type of move, and now you have that hard high here that's leading you back perhaps to that rising 200 week. The 200 week is currently at around 117, I think. Let's see, 118 now. 118.08. It continues to rise as this thing drops. Maybe 120 could be about that spot. So are we headed to 120? Up ahead. And is that going to be the next great spot to be in, even if it's a short-term basis? Or maybe it becomes a long-term opportunity to rally off the 200. Multiple year rally. Can it do that? You know, based off of this flagging pattern right here, maybe it does. You know, if this is considered one large bull flag here, then maybe it can break to the upside, get through 160 and make a move. So 120 might be the level to watch here up ahead, which means we got to go down there and get that level. Are we going to go down there and get that level? Based off of how this market has behaved, it has not been able to successfully push through a prior quarter's high by any means. You know, ever since this high back here, remember when we closed the year, we said watch for a rejection at the high and a return to the quarterly and yearly mid, and it did it. We were ready for that one. And since then, it couldn't get the high. It fell just shy of the high, well off the high, and in here, rejecting off the high again. And each time, it's made a forceful move back down away from that high each and every time. Is this time coming again? So if we get going to the downside, we might have our shot again at a new low, a rising 200 near 120. You know, if it happens next quarter, then it could be a April trap and reverse. And even if it's a short-term rotation back to 145 or maybe higher, 150, then that's a good percentage move. Takes them off the table. Maybe this thing's able to continue longer term. But right now, this thing looking quite bearish. So again, this is a leadership stock that looks and appears a bit beat up after the recent rally. So when you look at something like Amazon and you look at the similar price action, this is Amazon, and we are full on year and a half into this downtrend. I mean, strong top here in July, right? So then you take it this way, that's half a year. You take it this way, that's a year and a half. And now we're 2 months into the first quarter of this year. That is a long time for this stock here to continue to trend down. And again, the rejection here at the high was pretty significant. You look at this thing on a daily time frame, and you're looking at this test and reversal. Up on earnings, hit the 200-day moving average. The 200-day moving average traded there for a day. The next day, MGR gap down and has sold off ever since. MGR gap down and has sold off ever since. By the way, MGR gaps here are tremendous signals when they develop. This is going to be our next feature signal for Swing Trade Pro 2.0. So if you are an owner of that training, Swing Trade Pro 2.0, then you will automatically get this next training automatically and free of charge. You also get the live training that's coming up for it. So very excited about releasing that here. That'll be later on this month. But again, this MGR sell signal right there, tremendous. You can see it from a day trading perspective, it's a great signal. And then if it plays out as it should on an intraday basis, then it can become a great swing signal. This is the signal as well. Over here, that's the signal right there. This is one as well. So very good signal that helps to define the edges when it's nice. But in this chart, this stock traded 200-day moving average for 1 day and then made a beeline away from it to the downside. It reminds me very much of Q3 of last year, where it did the same. Rallied up to it, traded 1 day, and made a beeline away from it and continued downward for multiple months after. I mean, that was a continuation that head into the end of the year. So we're seeing similar characteristics here. Back here, it rejected there as well, dropped away hard. It doesn't have to necessarily be the same magnitude or force, but we've already seen a good move. We may have to go test the low of the year, right? Given that reaction. You look at the previous month's mid, again, a trap, a reversal. You're working your way back to where you came from to begin the year. So again, not looking the strongest out of Amazon. And when you think about where might it go, one of the levels that makes sense for an opportunity, don't know if it gets there, but if it gets down, I mean, we're at 92 now, so this would be quite the move. You're looking at basically this D-shaped profile right there. So you're looking in this lower pie portion as maybe perhaps the best spot to be in. Right now we are precisely at the middle of that portion after rejecting the upper pie portion here of the range on the last two rotations. Sold off here, went back up, sold off again. So when you're trading within, and again, I'm ignoring everything over here. I'm just looking at this right here and this great D shape. And part of this D comes from back here as well. So that'll come into the picture in a moment. But if you're here at the center and you've already rejected the upper end, you may need to go make that move to the bottom, and then you snap back to the middle, and maybe you go across the range, and then you're in that range. And if you look back here, that is what this one did. This is that lower edge right there. This is the upper edge. You go up here, you come back down, you go up there, you trade, and eventually it was able to make its move and find a new distribution. So we're inside this D shape with the potential to drop quite a bit more. If it got into the 65 to 70 zone like it did back here, that could offer a tremendous opportunity to snap it back to 90 and then likely back across toward 110. That could be a pretty solid move. At what point do we break this trend, though? That's the deal. At what point do we break that trend? And if nothing else, that island reversal, that MGR sell signal we saw off the 200-day, that's going to provide a tremendous pivot to push through somewhere down the road that will open up that pivot high at about 146. So ultimately, perhaps 146 might be where we go. And then when you look at it from one last angle, this quarter's low, this quarter's high. If you look at the extension, it takes you right to 146.5, which is right here at that prior quarterly high. So it's already measuring up for that type of move, which means if we get anywhere below this low, it could be a trap. Doesn't necessarily have to be perfectly down here. If it just dips its toe below 80, that might be enough to get you to 114, and under the best circumstances, 146. So some thoughts on Amazon. It's incredible how this one continues to trend lower for so long, but there is a pretty solid area of support coming up that could be tremendous. So that's a longer term kind of view of this one. So that continues to show how bearish this market is from a long term perspective. Right now we obviously had the rally to begin the month, to begin the year, a little bit of weakness now, and the volatility so far in the first 2 months of the year way lower than anything we've seen before. So it's a little bit moderately a different personality from a shorter term perspective, but from a broader perspective, we're trending down in 3 different years right now, 21, 22, and now 23. So I mean it's not unsignificant here. So again, insignificant, I should say. So I would say right now, if Amazon gives a little bit of a bounce, it could be a sell for a push to the edge. And whether you trade 80 to 84, that's a good opportunity to watch for some reaction. Anything below that zone could be a great opportunity. Oh, Dwayne mentions here an open SBW at 84.20. That's basically the previous year's close, previous quarter's close. So SBW would mean a magnet back to that price from where we currently are. So yeah, right in line with that. Thank you for that, Dwayne. If we take a look at Tesla, and again, covering some of these larger stocks that have interest that folks really like. This one, I am very surprised with how strong it came out of the gate. I am surprised and not surprised. But this was a tremendous move, and it doubled out of the gate. You got 100 here, and it got to 217 here. You know what I mean? So a tremendous move right out of the gate. But is it the rally before another drop? Is it going to be able to maintain acceptance above the 180? We have ourselves a narrow range, and we haven't really been able to add to gains since the initial rally. Instead, it's kind of sat up here just below the 200-day. Is this another opportunity for a rotation down? Again, sometimes these markets make moves down and up, and then it has to kind of build its energy before it can make that next move. You know, you kind of come up here and you build a little bit of energy, and then you make the next move. Depending on the size of the range, you know, that tells you how much movement we might see. This range right here is super compressed. And I got it on a 15-day here, but it's even more than that. It was basically all of last month. Let's go 20 days. Let's just do 20 days here. Compress it up. Okay, one less. Let's go one less. There it is. So it's 19 days. It's a 19-day compression, and it's 50% of average. You got 35 points. It's usually somewhere higher. And you're way down here on the profile. So when you look at the ebbs and flows of Tesla, it's exactly what I said. It'll move, and then it'll compress. And that compression fuels the move, right? And then you compress. And then it fuels the move, and then you compress. Move, and now we're compressed. So we're about to fuel the move here with this narrow range. And you, again, when you're just looking at recent history, the last 4 or 5 months, when it gets this compressed, the tendency is for price to really move and go somewhere north of 75 points. Right? This is 100 points, and this is about 90. And right now, that upper doubt is 80. So we could be looking at an 80-point move up ahead. An 80-point move, which is a huge move given that this thing is only 200 right now. It's 200 bucks. We're not talking about the $2,000 Tesla. We're talking about the $200 Tesla. And so that $200, you lose 80 points. Say it gives up at 200 here, you're dropping right back to where you came from to begin the year. That's 80 points, 200 to 120. Maybe the breakdown point is 190. Okay, 190 to 110. You're going back to the bottom of the previous quarter, previous year. So tremendous start to the year. And this was my worry to begin the year, is if we do start strong in some of these stocks, is that going to get certain people excited here, and then you buy in, and then it fails, and you're left holding the bag? You know, there's always that thing that says, you know, Dwayne will tell us right away, you know, you don't want to short Tesla, right? Do not short Tesla. But there has been times where this thing has obviously rotated back down. Are we about to see another one of those times up ahead? So 180, 190, where's the breakdown point? We got this narrow range, and it's measuring out to about 80 points of movement. Again, when you look at the volatility profile of this stock, 80 points of movement is pretty easy. You know, here and here and here and here and here, multiple times and beyond. So again, like I mentioned to begin, when you have the market trading within narrow ranges, the ES, the YM, the NQ, 5-day narrow ranges, 6-day narrow ranges, you're going to have stocks that are doing the same thing, and that means that these candidates are building that energy for the next move. But these candidates, some of these, still aren't ready for the entry, right? Still need a little more time in the oven. And at some point here, when we do get a break free from this range, it could be significant, again, to the tune of about 80 points of movement. You look back here, after this move down, built that narrow range here, and then bang, right, started to drop. Over here as well, you get that move up, you got this narrow range. Which way do we go? It could be about 80 points. So watching Tesla very closely here. You look at something like, let's look at STNE. Actually, no, I passed one up. Google, my bad. Let's look at Google for a moment. Google here has been very bearish as well. So again, you talk about one of the biggest stocks out there alongside Apple and Tesla and some of these others. And you see an Amazon, and you see how mature the downtrend has been. Very, very mature. Again, topping out in November of 21. You got a strong high in early in 22, downtrending the ever since. And then over here, strong start to the year, failed new high above the previous quarter's high, and a quick trap in reverse. Already a round trip back to where we came from. Many stocks still haven't gotten there. So this thing's leading in the wrong way. Leading in the wrong direction. And when you look at the reversal it had up here, this also happened off the 200-day moving average and quarterly, the previous quarter's high. And then the first major sell signal is an MGR sell signal. Midpoint gap reversal sell signal. And we've seen the weakness. This is another one right there, and we've seen some weakness. So Google, again, leading to the downside. And at some point, do we find a strong low? Do we find that discernible capitulation low? We're still digging. We're still looking. This market's still looking. That's why it's been tough to really get behind the strength fully. It was good to be in short term. We talked about that before, but once we start hitting these upper levels of resistance and LVNs, how is the market going to respond? And right now, pushing down away from those levels with the potential to see new lows up ahead. So when you look at these larger stocks right here, quite a bit more downside could still be ahead. All right, now let's look at some opportunities here of just kind of some general stocks. STNE, I've talked about this one as an accumulation candidate. And when you look at the weekly chart here, we discussed this one as an accumulation candidate in Q4. Or it might have been Q3, but late last year. And one of the things I mentioned was, when you get into a phase of accumulation here, it's always tough to figure out when you're going to get going. It could be a month from now, it could be the next day on earnings, or it can be double the range from now. If this was a 6-month range, we just tacked on another 6 months here, and now we have ourselves a year-long trading range. So we haven't quite broken away yet. Instead, we're still right in the grips of this accumulation. You look at $10, that is VPOC, big accumulation. Look at the VPOC here, and then how the slope of the both sides here goes straight down like a mountain, a steep mountain. And so what that does, and again, is it shows us that we have quite a bit of energy here, quite a bit of volume in such a small, compacted area. And so at some point, something's got to give, and it's going to blow. And the tendency is not that all of this accumulation is going to make it go to zero. Instead, you're looking for that moment where it pops above 12 or 14 and has that huge day up like this, because once it does that, it's big time strength season back toward 45. So this is the one that we mentioned before, that right now it's building up in this range. We don't know when it'll break. But if it can get through 14, 15, it opens up some upside. From a shorter term perspective, what I like about a candidate like this is if you time your entries right, you can work your way into these trades very nicely, because the range is such that it is a wide enough range to make some really good moves. For example, you look at the range of accumulation here, it's a 50% of price range. You got $12 on one side, and you got $8 on the other. You buy 8, sell 12, right? That's a 50% move. It comes back, you do it again. It comes back, you do it again. It comes back, you do it again, and over time, you can build into a position in a risk-averse manner because you have sold some after you've bought some. And so that can, for example, say you buy a 100 lot here at $8, just 100 lot, that's $800, right? And then this thing rallies up, you sell 12, you sell 50 of those. And so now you just got a really good chunk there, and then when price comes back, you add the 50 back here. And it goes up, you could sell it. You know, and then you can, or you can build in. You can buy another 100 here, and now when it goes up here, you sell. And now you're building in a risk-free trade, if not more, and over time you go. So right now we're in that zone again where you might be able to be in for the next move up as it continues to trade within this range. So this one here could be actionable sooner than later. This is also one that could be used with options if you like. But 8 to 12, eventually you're looking for the massive push through 14, 15, which will open up quite a bit of range up ahead. That's a long-term play idea, but this is that accumulation candidate. So just coming back to discuss this one. Let's take a look at team. This is Atlassian. This one has a narrow range over the last several days and is also on the verge of giving up a pretty important support level. The 160 is an important CLVN, very clear support. And what you see right now is price holding right at that area. Recently got a higher high failure, and look at that right there. It bounced right off the 200-day moving average, just like it did here and here. Additionally, look at that sell signal again. That's the MGR sell signal. And it's happening kind of on a pattern here. We're seeing many stocks go hit their 200-day. It's closing strong. Everybody's happy that it's at value. And the next day, you're seeing these things gap way down and sell off away from those levels like it had the plague over here. So it's pretty interesting how that's playing out. But at the moment, you see that higher high failure. You see the MGR gap sell signal, and you drop and you hit 160 here. And now you've built out this narrow 6-7 day range, failed new high, closing lower, outside day down. This thing is on the verge of a breakdown that could, again, return us back toward where we came from to begin the year, that 130 level, 129. So if we count these days off, 1, 2, 3, 4, 5, 6, today's the 7th day. We'll update this to 7 here. This is the PivotBoss Advanced ADR Indicator, Average Daily Range Indicator, so it helps quantify daily range very quickly, gives us a bunch of data points that we can see that are color-coded, and gives us information very, very quickly. So when we look at it from this perspective here, you can see the compression because it's magenta here. So you got that compression right there is quantified here. When you have a quantified level like this or like this or like this that's compressed, you're looking for a breakout that takes you higher into and through the upper red dot. That's what turns it blue. And then here up through the red dot, that turns it blue. So from pink over time to blue. We're at pink right now. We're looking for this thing to over time hit that upper red dot, push through it. So that's about 30 points. That's about 30 points. It looks like it's finishing at 2670 here. You know, somewhere between 28 and 30 points, 25 and 30 points. Easy. Recently, it's able to do much more than that, as much as 40. So just call it 30 points. 160 is here. You break 160, drop 30 points, and it takes you again right to the beginning of the year. 30 points, 130, and we're back, and it's a round trip for these stocks. Remember, Google's already there, right? A lot of these stocks that are leading lower. Narrow range, failed new high. If you want to talk pivot range concepts, this is a higher value with a bearish bias. So this is the pivot range from last month. The current pivot range for this month is here. So notice how it's higher. But the close, the black dot here, the close of the prior month is below the brand new pivot range. If it's higher value, ideally you close above it so that when price drops into it, it's support and you continue. If you close below it, any rally into it is first sold. That's what happened today. Price rallies up to it, it's sold. It's sold at the 8 period. 8 period has been sold. So this narrow range breaks 160. We're looking at 130 up ahead pretty quick out of this one. So that is Atlassian. Again, do we break tomorrow or do we break the next day? Do we break when do we break out? That is yet to be seen. But again, a failure through 160 will open up that 130. All right, let's take a look at AFLAC. AFL. AFLAC here. This one is compressing as well with a downward bias. 1, 2, 3, 4, 5, 6, 7 days also. You can go 8. You know, it's 64.6%, which is right there on it. So you don't have your fuchsia, but it should be. If this thing were to go grab the 125, that's about 3.25 points of movement. 3.25. 3.25 seems pretty easy. This thing's been able to move north of 4 points when it really gets going, and close to 6. I guess it hit 6 back here. So call it 350 to 4. $3.50 to 4. Let's just be adventurous and call it 4 points. If this thing breaks down, you're looking at a 4-point drop up ahead at the very least. I think this actually has a bigger compression, not just the 7 days. It could actually be kind of a 15-day. The other thing is when you look at this thing from a rounded top perspective, we're at the cusp of breaking that zone where it opens up the flood of selling pressure back to the prior pivot low. So when you have a large rounded top like this, a saucer top, rounded top, when you fail at this edge, you can drop, you may retest, and then you work your way to the prior pivot low that led into or fed into that rounded top. So failing at 67.5 would be huge because that's a 10-point projection that takes you down there, because now we're not looking at just the last 6-7 days, we're looking at the last 3 months. And from that perspective, we could be headed way down. So when you're looking at this market right here, AFLAC here sitting right on top of the prior range highs. These are the prior range lows. You got the middle of the zone somewhere in here, and right now you have this rounded top that is sitting right on top of that level. You break here, you open up a return to 61 very easily. Maybe it trades in here, you fail at 61 and can follow through to the bottom edge of the range. So this one, fairly bearish here in the near term, but could really pick up steam if it fails through 67.5. So a lot of bearish candidates from this perspective. If you look at workday, it's a similar concept, and this is kind of how we began the outlook with, is that we had some early strength to begin the year. Now that we've reached major areas of interest, we've seen these things either full on reverse, or we're seeing topping patterns, or we're building compressions that could then fuel the move down. This is one we looked at a bit earlier in the trading room. This is workday. Again, when you look at this one at like a 19-day range like we did the last one, it's going to point to a move that can take you well down within this range. So that compression right there is looking at 26 points. Just like team, huh? Maybe as high as 30 or 40 points. Let's call it 30 again. And if you break 30, or break at 180 and drop 30 points, that takes you to 50 here. So that's what 30 points looks like. What if it's just 25? Then you're looking at the 155 here, which is the midpoint of the previous quarter. So you're kind of lining yourself up, right? You got the rally from the midpoint up to the quarterly high. You have energy here built up now, and if you fail, as you currently are with the failed new high, you rotate back to where you came from. Could be a 155 target from a 185 break. That's a minus 30 as well. So building energy right now with the potential to drop down. Your 180s right here. Oftentimes you could look to buy the 180 put, watch it drop through that level. Currently out of the money. You could also look to sell a call spread, like sell the 180, 185 call spread with, you know, at least 10 to 20 days to expiration and allow this thing some time to go. But right now, looking at what could be a rotation back down. You know, I was looking at that over the last several days, Dwayne. That's a good point. You mentioned here, I don't remember all your monthly outlook candidates being bearish. I mean, this is incredible how much came across the line looking bearish. And even when I saw something from bullish scans, it just, nothing really stood out, at least initially. Instead, a lot of these do look like pullback and bearish candidates right now, absolutely. I mean, the whole lot. It's incredible. It could all change if we break these ranges to the upside, as we mentioned. You know, something significant could happen. What if we drop hard tomorrow, outside day up, and get ourselves a huge rejection day, you know, one of these or one of those, something down here, then that could fix some stuff. But, you know, shy of that, we're still in a price discovery phase. Last one here from the bearish perspective, DHI. Look at this range. This is another one of those narrow 5, 6, 7 day ranges. Let's see, that's 7 days, so let's go 7 here. That 7 day narrow range is looking at about 9.5 to 10 points of movement up ahead. So you can see the red dot here takes you to 9.5. 10 points could be right above. That's an easy target for this one. So 9 to 10 points, 8 to 10 points easy of movement. Strong high. MGR sell signal. Man, these MGR sell signals pointing at these tops here. Dropping. You see this thing right here. 1, 2, 3, 4, 5, 6, 7. 7 day narrow range right there. You can see 51% of average. 9.5 points. Just let's call it 10 to be even. Is it 10 from the breakout? You know, 90 minus 10 gets you to 80, and you're right at the previous quarter's midpoint, and you're precisely at the 200-day moving average. So it checks out, right? So you like to see when you have these compressions and they quantify a move that takes you to an area of confluence that makes sense on the chart. And that's exactly what we're seeing here. You know, if you fail to hold the previous year's close or the previous quarter's close, then you're going to drop to the mid. And right now, if you break down out of this narrow range, it forecasts a move that takes you right to the mid. If you're turning down hard up here and rotating down, perhaps you snap back to the 200-day. So ever since we pushed through the 200, it hasn't come back to it. Perhaps that's in play. So DHI could be looking at a move that takes you down toward the 78 to 80 zone up ahead. Tremendous compression here. Again, we'll see if we get a breakout up ahead. Yeah, it is incredible how that lines up, Steve. That is wild sometimes when the math works out. In terms of that ETH earlier, the futures versus the cash. So the cash kind of, you know, you can't really trade the cash, right? It's like the $ SPX versus the ES. This is like the $ SPX. This is the cash, ETH versus USD right here. Whereas, yeah, SPX would be like the ES. So the ETH by itself would be the futures contract. So yeah, that's the difference. And because the cash was around first, before the futures contract has less data to pull from, whereas the cash gives you more data to work with. That's why we were able to to bring it back out and see a bigger picture? Good questions. So I am going to go ahead and call it a market outlook right there. Again, not as many symbols we looked at, but we did do a good deep dive into each of them. A lot of good targets were reached out of our first monthly outlook of the year, where we were looking for a move that took us up toward the quarterly high. Now that we've gotten there in many of these, we're starting to see a rotation back down. So the idea for the rest of the month is, do we see a full-on rotation back to where we began the year? You know, kind of like what we did in Q3, where these markets rallied in Q3 up and then came right back to where it came from. That tends to happen quite a bit. Here, you rally right back up, and then you're making your move where you came from. So the idea is you likely go see a completion of those targets at the very least, and then reset heading into the new quarter in May. All right, everyone. Thank you very much for joining me. Again, I will post this here for your enjoyment later on. Also, if you want to get a head start, check out Swing Trade Pro 2.0 at PivotBoss.com. Again, new training coming out for that. The MGR sell signal will be the star of that one, and looking forward to discussing that more. All right, everyone, have a fantastic rest of your day, and we'll see you soon. Take care.